to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a couple of minutes here to get started. Let us go live on all the different platforms. Give everybody a chance to tune in. Hope everyone's been having a great week so far. We went ahead and put up the chat there on the screen, so you can drop a comment in the chat there as you tune in. I see a couple people are already dropping some comments there. Dan, Mark, Jamie, good morning, everyone tuning in. Thank you for tuning in early. We'll get started here very shortly. Great topic today, something that we do very well here at the Mortgage Calculator that most people do not do. We'll get into that here in a little bit. Good morning, Jason, Christina, everybody commenting there. Got a great show here. We'll get started in just a moment. All right. Adam, Robert, David, everybody tuning in. Appreciate it. Feel free to drop a comment there in the chat as we get ready to get going here. All right. It looks like we are live on all the different platforms. So we should be good to get started. We'll go ahead and take the chat off the screen there so we can get into it. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And today our topic is something that we specialize here with the Mortgage Calculator, which is DSCR loans. And today we're talking about 9+ unit DSCR loans. There's not that many outlets for that out there. We are one of them, and definitely something that we excel at here with the 9+ unit DSCR loans. So we will do a deep dive into that later. But what we do every morning on this show is go through the actual live mortgage rates for different programs and see what they look like so we can compare them to the last days and see how the market is doing. So before we go into our deep dive today on the 9+ unit DSCRs, what we'll do is we'll go ahead and pull up our pricing tool and see what the actual rates are looking like. So Nick, why don't we pull up that pricing tool and see what the market is looking like this morning?
Alrighty, let me switch my screen and we'll get started. All right, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and terms for today. It is May 24th, just after 11 a.m. So our general programs are live with new rates for today. This will show us the rates and the APRs for all the general programs. If you'd like a full breakdown of all the fees that go into the APR and a full loan estimate, please get with our team. We have over 350 licensed loan officers in 24 states now, and for primary and second homes. And we can do our DSCR business purpose, which Jose is going to go into detail, in 44 states, so pretty much every state. So we'll use our tool here to set up a basic scenario so we can compare across the programs. We'll set up a $400,000 loan amount. We'll set the LTV to 80%. That's 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in costs. That's typically the request we're getting from our customers right now, is to buy down the rate a little bit. So that's the most common request. And we're going to go through, as we do every morning, our conforming conventional first. Then we'll check out our FHA rates with the same scenario, and then we'll compare that to our expanded guidelines, non-QM, where we have over 5,000 additional loan programs. We don't do VA or USDA live. VA is only for eligible vets or active service members. If you do happen to be eligible for a VA loan, we can quote that very quickly, but not everybody is, so let us know. And same with USDA, that's only for properties in a USDA eligible area. If you do happen to be shopping in one of those areas, we can do a quick quote, but not everybody is. So we start first with our conforming conventional. We're going to set up a purchase, 30-year fixed, pretty standard loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's check out the conventional rates this morning. And gone up just a tick. So this week, obviously, the rates have gone up since last week a little bit, but that's why we love to do the show, to watch as it moves. So here, the best option, 6.875 rate for 0.875 discount points, and that pushes the APR up just over 7. So 7.037 now for conventional here. So remember, the APR allows us to compare apples to apples across programs, so we can compare the true cost of borrowing across the different options. So here we have our conventional just over 7. So now if our customer doesn't qualify for conventional or wants to just check out other options, typically the next option that most borrowers go with, we'll set up the same scenario and we'll compare to our FHA programs. FHA does allow a little more leniency on credit issues as well as a higher debt to income ratio. So this is typically an option if people have any trouble with a conventional. Everything else will stay the same, so we can compare apples to apples across these programs. So it looks like FHA today, the best option the computer found, 6.125 rate for 0.875 discount points and costs, and a final APR here for the FHA, 6.713. So in this scenario, actually, the FHA rates are a little bit cheaper here for our borrower in this scenario. So definitely recommend all of our borrowers out there shopping, definitely compare FHA. Even with the upfront costs for the mortgage insurance and the yearly mortgage insurance, which is included in this APR, it's actually still a little bit cheaper. So definitely don't discount the FHA. It's a great option here. Now, if for any reason our borrower doesn't qualify for FHA or conventional, many other banks and lenders don't have other options, but this is where we specialize here at the Mortgage Calculator. We have over 5,000 additional options under expanded guidelines, aka non-QM. So when we select this option, we'll keep everything else the same. However, we have a new box we can select, which is our income verification. So full doc is 2 years of tax returns. That's what we have to use for both conventional, FHA, all the standard programs. So typically we would select one of these non-QM programs to use one of our other options for all docs, such as asset-related options, business bank statement options. We have our DSCR options we'll go over here in a minute. For investment properties, we have personal bank statement options, VOE options, 1099, P&L, no income at all options, tons of different variations. But the most popular by far for a primary home purchase is going to be a personal bank statement 12-month program, and that's going to be for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and may not qualify at all, or may need to qualify for more income. They can't qualify with enough income to get the house they're looking at. So these solutions, these programs will allow us to provide solutions for our borrowers where we can use, instead of 2 years of tax returns, we can use their last 12 months of bank statements to determine a debt to income ratio with no taxes at all, or simply use the cash on their bank statements to determine a debt to income ratio in this scenario of 40%. So most self-employed borrowers would either qualify where they wouldn't qualify at all, or qualify for much higher income amount and therefore the home they're looking for. So let's check out our bank statement options this morning. Very nice. So one of the best options here, 7.25 rate for 0.875 discount points and costs, and a final APR of 7.312. So remember, conventional was just over 7. So our borrower that's comparing conventional to a bank statement option here, definitely recommend they check out the bank statements. Just a slightly bit higher cost here, very comparable, and we get a lot more flexibility with the bank statement options. Some of these programs that we have here under these non-QM may even allow things like credit events like foreclosures, bankruptcies. And as you can see here, there's just tons of options. So please get with our team. We'll find the best option that fits for your scenario. And as you can see here, some of our best options are almost exactly the same as conventional right now, which is amazing. Definitely recommend those out there shopping, compare all 3 options. Now, before we go into Jose's deep dive, we always want to do live rates for investment properties. So we love to work with investors, whether you're a first-time investor or you have dozens of properties. We have some great options. So we'll pull these up live. We'll set the same scenario, 80% loan to value, 20% down payment, Same desired price of 99, meaning 1 discount point in cost is our target. And we're going to compare our conforming conventional investment property programs to our expanded guidelines, aka non-QM. Remember, FHA, VA, USDA are not eligible for investments. So we just compare these two options to check out the investment property rates. So everything else will stay the same as all our other demos. The only thing we've changed here is occupancy. So let's check out investment property live rates this morning. So for conventional, wow, this option's really smoking everybody else out there. So 7.125 rate for 3.625 discount points in cost for a final APR of 7.379. So the GSEs that operate the conventional loan programs have added additional penalties, loan level price adjustments for investment properties. So unfortunately, the computer can't really find good options for 1 discount point. So I definitely recommend our investors out there, whether you're a first-time investor or a seasoned investor, check out the non-QM options where we can find a little bit higher rates with more reasonable discount points. So for our final demo today, we'll set this to investment property, 80% loan to value, and we'll do our non-QM investment property options here. So everything else stays the same, but we do have to select our income for non-QM. And the most popular option by far, and our most popular product in general at the Mortgage Calculator, is our DSCR program, which Jose is going to go into a very special version of that here in a moment. But DSCR is the most popular because it doesn't require any income or employment from the borrower. We're simply going to use the estimated rental income to determine a DSCR, debt service coverage ratio is what that stands for. So as long as the estimated rental income can cover the expenses for the mortgage payment, PITIA, that would be a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. However, we do have options for ratios under 1.00, aka the property doesn't quite cash flow on a monthly basis. So we have tons of options for different ratios. Obviously, the higher the ratio, the better terms, but we do have options for ratios above 1 and even below 1. So for our demo today, I always delete this so we can see all the different options. And the final thing we need to select is a prepayment penalty. That is standard for all of the investment property non-QM programs. The standard is always 3 years. However, we can choose 0. That will limit the amount of loan programs and cost more. So we don't select that on the demo. And same with 5 years. That will cost less, save us a little bit of money, but not all loan programs offer 5 years. So to see the most common options, we're always going to select 3 years for our demo. So with those basic settings, let's check out our DSCR options. So great options here. Again, we love when the non-QM options are very comparable to the conventional. So here the best option the computer found, 7.75 rate, 0.85 discount points. So we solved our investor's problem of high discount points here, a little bit higher rate. And the final APR is very comparable, 7.812 compared to conventional was 7.3 something. So definitely recommend all of our investors take advantage of these DSCR programs. Nearly 100% of the investment property applications that compare conventional to DSCR end up choosing the DSCR because of the ease. We can do 1, 2, 5, 10 DSCR applications at a time for a borrower because it doesn't require any income or employment. We can refi multiple properties to purchase multiple properties, a lot of flexibility and a lot less documentation for our investors out there. So definitely recommend our investors looking to purchase investment properties, always check out our DSCR options. And if you scroll down here, you see there's a ton of different variations in the DSCR values, a ton of different variations in the prepayment penalty amounts. And some of these programs may allow, at the higher rates here, may allow things like short-term rental income to be used, may allow things like foreclosures and bankruptcies. So tons of flexibility that we're afforded with these programs. So definitely recommend all of our investors check these out. And now let's go into Jose's presentation on a very specific set, let me change my screen, of these DSCR products. For those of you that joined us earlier, you know we're going to be talking about a 9+ unit DSCR. So for all our demos, we always do 1 unit. That's pretty standard issue, is a 1 unit investment property. However, for our multifamily investors out there looking for the large, or I guess you would call them not large multifamily, but the small multifamily commercial properties, we do have some great programs. We did an episode last week on the 5 to 8 units, which is the small commercial. Now we're talking about the I guess we would say medium commercial here, right, Jose? 9 to 100, 9 to 80 units. These are the kind of in-between products. The very large multifamily properties typically go, back to a Fannie Mae type of program. This is kind of these hybrids that we love, these DSCR programs, where it's hybrid between a commercial loan and more of a traditional residential loan. So these are some great options, which are similar to what we just saw for our 1-unit standard DSCR. So if you're ready there, Jose, let's have you go ahead and take over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. The amazing thing about this product is the flexibility that the option offers regarding zip codes and population density issues that are experienced with most commercial options for a 9+ unit. Actually, that's going to be for most commercial options for a 5+ unit. You go to the commercial conduit world, first thing they're going to look at is the zip code. They're going to run it through the different databases to see where the population density comes back at, and other factors that they can take into consideration to move forward with the application or not. That residential type conduits cannot. You're not going to go in for a residential loan and say there's too much crime in the area, we're not going to do it, or there's not enough people living in the area, we're not going to do it. Now, rural and other type of scenarios for your appraisal is a different consideration, but this is just straight out looking at a zip code table. So again, this is one of the very amazing options that this program offers, besides the fact that it basically treats the DSCR loan like a regular 1 to 4 unit residential DSCR loan. Now, there is additional factors to be considered now, and the pricing that I'm going to show here today is straight off the pricing engine, but that would have to be fine-tuned by reviewing the rent roll, right, and confirming the DSCR is above the minimum of 1.1. So there are other factors to be taken into consideration, but it is a very easy program for the borrower, and especially when considering the area, because what this program will do, once you provide the exact address of the property, they will then categorize it as a tier 1, tier 2, tier 3, depending on the population density of the area. They may do an LTV adjustment, but they will, provide a rate and a loan option. So for our first example here is for our best case scenario, which is 760 plus credit score. And you will see that our lowest cost option is 8.875%, and you can buy it down all the way to 7.875%. So this is 75% LTV, which is the maximum LTV for this program. 75% is the max. So 740 credit, we can still do 75% LTV, but you see that the rate goes a little bit higher. Here we had 8.875 was giving us a lender credit. So here we have 9%, a little bit higher, roughly 1/8% for the drop down to the 740 to 759 plateau. So now we're 720 to 739, and we're still doing 75%, which is the maximum LTV. And now what happens here is that our rate, lowest cost option, goes up a little bit more to 9.25%, with the lowest rate option being 8.125%, but most importantly to our investors, 75% with the 720. Now, at a 700, your LTV does drop. So this is 700 to 719, basically, is the range, credit score range for this LTV and rate. So 70%, but now our rate does get a little bit better. 9.125 lowest cost option and 8% lowest rate option. But those investors do love the higher LTV. So when in the scenario, please check the credit simulation for the borrower to see if we can uncover any opportunities there for them to raise their credit score to 740 or 720, excuse me, and get that LTV, because it is here at 720 that we go 75, and at 700 that we go 70%. Now 680 is an option for this program, but again, it's 65%. Most of the time we get 680, 680 borrowers that want 75%. So, again, check those credit simulations, see if we can uncover any opportunities within their accounts to raise it to the 720. But in this scenario here, we're looking at 9% lowest cost option and 7.875 lowest rate option. 680 at a 65%. This is just, remember, set the proper expectations for your borrower so they are aware. And we can even, on the purchase, because remember, purchase is less risk than a cash out refi. So on the purchase, we can even do 660 to 679 credit score for this option. Those of you probably didn't think that was possible, because when you are running that 660 credit score borrower, again, you're trying to usually get the max LTV and you don't get any hits on the pricing engines. But right here, 9.5% lowest cost option, 8.375 lowest rate option. And this is our only, it's 660 is the minimum credit score for any LTV option on the purchase for this product. And then we got some refi, cash out refi options with a 760 plus credit score, which is the maximum plateau at which they give any adjustments. You're looking at a 70% maximum LTV. So maximum LTV for the program on a cash out is 70%. Maximum purchases 75, so it only makes sense. 9% lowest cost option and 8% lowest rate option. That's pretty good for a 9+ unit. 70% cash out refi, strictly going off our rent rolls, right? Not bad. Now, 720 is the minimum credit score for a 70% LTV cash out refi. So 720 is going to be your minimum. 9.25% lowest cost option, 8.125 lowest rate option. And our minimum credit score at any LTV for this product on a cash out refi is 700. So notice it was 660 was the minimum credit score on a purchase, but like I was mentioning, the purchase transaction has less risk associated with it than a cash out refi. Hence, 700 is the minimum credit score at a 65% LTV for any cash out refi transaction for this 9+ unit DSCR option. 9% lowest cost option and 7.875 lowest rate option. So really good LTVs here, considering what we're doing here on our DSCR 9+ unit option. So looking forward to helping you all structure your 9+ units. You should all be out there letting all the investors know the great programs that we have for their 9+ multifamilies.
Absolutely. Okay, I don't see any questions, so I think we can go ahead and wrap it up here. Thank you, everyone, for tuning in. If you want more information on some of these programs, you can visit us at themortgagecalculator.com. We can pair you up with one of our 320 loan officers all across the country. We do this show at 11 a.m. Eastern every single weekday to go through the different rates and do a deep dive into a different topic, just like we did today with the 9+ unit DSCR. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow at 11 a.m. Eastern time for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day.
Thanks, everybody.
Thank you, everybody.